Hey everybody, good morning. Back on a stream here, finally. 2 weeks away. For everybody that I met in Helsinki and everybody that came to Riga for the Baltic Honey Badger, it was great meeting you, seeing you. It's awesome to, in the real world space, meet space, see people that are like-minded. I know that when I get on a lot of the American pods and talk about Ukraine, audience isn't necessarily that helpful, but it was really good seeing like-minded Northern European Bitcoiners and just chatting about all sorts of stuff. So really enjoyed it. Thank you for, stopping by, saying hi, and just coming to the Baltics. And Helsinki, of course. Summer is winding down here. I don't know about you guys. We basically have had a canceled summer. No good beach days. I was at the beach in Jormala, this beach town, with my family. This week it was totally raining. But that's why we have indoor pools. Play with the family there. Anyway, enough of the chit chat. Back to the charts. It's been 2 weeks since I've shared this. And let's just zoom in on our old power percentiles here. Okay, this is between the 10th and 90th percentile around the power regression. Not much has happened. Just danced around the trend. And I know a lot of people are pretty bearish with all the sort of muted price action. People are wondering when moon, of course. But as far as I'm concerned, this is all gravy. All right. Every time we close above this black line, it's pulling the black line higher. All right. This is not a stock to flow model. Good morning, Roman. Thank you. Met some good Norwegians in both Helsinki and Riga. No Romanians, though. At least I didn't meet any. I'm sure there were some, but yeah, I mean, this, to me, I'm pretty optimistic. Every time this closes above this black line, it's super strong to me, super bullish, right? Because from May 2017 all the way to November 2018, we were above that black line, but, over half the time you're on a downtrend. November 2021, kind of like a scam top. Real top seemed to be in March 2021. And then we're down again. And every time that we're below this black line, we pull it back down. So now that we're above it, we're in the happy day period where we get to see, how this price action can affect this trend line in the future. So to me, it's a super bullish thing every time we're above the trend. Again, 2/3 of the time is about the trend line itself. Right? You see it's between the 60th and the 70th percentile. So the trend line itself is about, call it 65. I don't know exactly at the moment, actually. So 2/3 of the time, price is below this black line. 1/3 of the time, price is above the black line. So by that very definition, we are in, a somewhat rare territory. Price has only been above this black line 1/3 of the time of all Bitcoin pricing days. 2/3 of the time it's below it. Okay, so I want to refresh on a couple things now. So again, though we've been above it, and I think bullish, we're not close to above the 90th. And the 90th was when the fund starts. All right, we talked about this many times. You can build these mountains of days above the 90th. Sometimes it drops below. You got to reset the count, but 83 plus 30. Usually something like 3 months, 4 months, 3 to 4 months is all you get above the 90th. And if you want to prepare yourself, we're not there yet. Talked a lot about mining with Adam Back and Peter Todd these weeks. Not really about economics of mining, but just how, sort of reminiscing about some of these earlier consensus models, different protocols, Bitcoin Unlimited. Different block sizes, emergent consensus on the block size. All of these things from their perspective were just terrible ideas because it's not robust. It doesn't make the protocol robust. Mining seems to be extremely competitive. And unless you're Michael Saylor, I guess people think the best way to get Bitcoins is to mine them. And I'm sure that's true on some level, but I'm not really a miner, just prefer to buy. But this chart right here is going to show you the trailing 12-month of miner revenue. Okay, so we peaked last cycle in January 2022, which basically caught all of those up prices in 2021 we just looked at. This double top. Go back here. Okay. Caught all of this pricing action. And so what this number represents is basically, again, if you take all of the block rewards, okay, and all of the transaction fees in every block, sum them together, multiply by the Bitcoin price at that day, and then roll that over trailing 12 months, you get this figure. And what's interesting is, take off the price of sales, you see this chopped off right here. This is the halving, the latest halving, just completely chops off the trend. It's pretty wild. And then even goes down because this is a trailing 12 months. So it's down from the year before and then back up. And we're still not at an all-time high. All right, we're at $15.5 billion worth of Bitcoin rewards, revenue. That's lower than the top of 16.8. I do think that this is a good indicator of a top. It's a delayed one though, as you see. Like, we were already on the way down when this peaked, so it's very delayed. I'm not saying it's it's helpful for like day trading, but you see in 2018, this is again when this was a year after, right? So the tops occurred here. Right there, right when it was starting to take off, the tops occurred. Good morning, Tim. Good evening, Tim. Good evening. Thanks for joining. Just saying how it was great to see people in person at these conferences. So anyway, if I put back market cap versus revenue, we get this price to sales. This is my sort of unique ratio. I still haven't seen anybody do this. I don't know why. It's a pretty good ratio, but it keeps increasing. Right? Market cap divided by this price to sales ratio, or by this revenue is price to sales ratio annually. All right, so if you take 2.3 trillion in market cap divided by 15.5 billion, you get a ratio of 146. That's the price to sales ratio. Here it is over time. When it peaks, it's a good sign of a top. All right. Now, I don't have price here on this chart. I also don't have price here, but I figured I'd do this because I've talked about it all the time. I haven't put it on. So we got the top 90th now of the price to sales. We're still not looking at price. So you go back to price, it's here. right? We can refer back to this chart, but this chart doesn't have price. It just has the PSR now. It has that ratio. Let's take this off. So again, when you get into the rainbows, this is the top 10 percentiles, 90th and above. You know, it's pretty rare. Now, this is even more, a little bit confusing chart because it's like multiples on multiples. The baseline is the trend, right? This is the all-time trend. And actually in the past, which I'm not showing on this chart, is the all-time trend sort of moves around as the power trend comes into focus, right? And then they'll match up here perfectly in the future. But point is, it's sort of evolving. The trend line is evolving in the past over whatever the power trend is at the time. So the power trend was going much faster here, then slowed down, just like in everything else. It's not a great trend as the other trends, you know, it's 70% R squared. It's not as good, but it is a power trend. It's better than linear or log. And basically we can see the top's pretty pronounced here. Okay, so December 2017. Let's go back to the price chart. There's the top, December 2017. So it's just another indicator to flash rare points. Okay, and this will probably never happen again. So I want to show you this exact date if I catch it. I'm not catching it. Let me zoom in. Let's see if I can catch it. There it is. So you see there the PSR on April 9th, 2013. This was the first boom. There were two booms in 2013, just like 2021. Was 73x. The regression all time is 7. All right, so it's about a 10x. And it's actually not doing a multiple on this black line. It's on the evolving, but it's close enough that it makes sense. So 73 divided by 7 is 10. So if you go to that 100th percentile line, the last line in the tooltip with the arrow pointing down, it's the top observation. It's when the multiple itself is 10x, 10.3x over the trend line. Okay, so there you see that puts in a new top for the 100th percentile, 73x. But you see how rare that is because then you go to the 99th percentile, it's only 4.2x. All right, over the trend. So what it basically is saying is this is never going to happen again. It's barely been observed, and it's not going to happen again. Hello, NGU Technology. Thank you. Thank you. I appreciate it. So, but once you get to the 99th, it's not that crazy, right? So you see, hits it here, you catch the double top, hit in 2017. Now 2021 is interesting here. We don't hit the second top at all. Here's the second top, basically here. It's very interesting. This is why this is kind of an interesting indicator. So if we just look at raw price, let's go back to 2021. Double top. Let's take the days above 90th off. All right, we flashed pretty hard in March, April 2021, and then we barely get above the 90th in October, November. But if you looked at it from this multiple standpoint, you don't hit it at all. It's not even close. Again, there's no price on this chart, but remember, October, November is here. So it's a warning. Then if you put the days above the 90th, get these mountains on this right-hand axis. Again, very similar to other stuff. 3 months, 3 to 4 months 3 months would be roughly 90 days, right? So 4 months where we're in the hot zone. And then we're out of it. If you take that till today, we're still out of the 90th. I don't actually know the percentile because didn't make the chart for the every 10th. There's all these different percentiles we can do, but we're probably, 70th, something like that. Even here, probably 70th, 80th. And this number, again, this is the market cap divided by that minor revenue, PSR, price to sales ratio. It's just a metric. Tends to go higher all the time, which is kind of weird, right? Because the stock market PSRs are way different. And it should be said, you can't compare PSRs among industries. Okay, so you couldn't compare this with like Apple PSR. It would be like 4, probably. If Apple, I'm just making up numbers, but if Apple's a $2 trillion market cap, they would make $500 billion in revenue, right? That would be a 4 PSR. It's more than that, actually. Apple's still larger than Bitcoin in market cap. In any event, it's way different numbers here for the Bitcoin industry or the blockchain industry. It's way different. And we'll have to see what shakes out as a normal, acceptable PSR for the market. But about 150 PSR is where we are right now. And to get to the 90th percentile, you got to get to 210. So I'm going to follow this pretty closely. I think it's a good metric to look at this time. When you're in, when you're out, I think it's pretty good. Let's just look. It went in to the 90th and above in December 2020. It went out in May. In May 2021. So you go out to the actual price chart. December 2020 is here. So it actually flashed a bit early, right? Because price wasn't even in 90th yet. And it went out in May. Same as that corresponded. So again, all these are positive in my views. Nothing to worry about. Nothing to feel like we're overheated. I know it's a totally different market now from then, but these are still normal metrics. These are somewhat like fundamental metrics. And the cool thing is this thing does not flash red for the second top. It's almost like, we're running out of gas. Take your profits or whatever. Never financial advice. So I was looking at this in particular. Let me go back to where's the PSR? All right, 2017. Notice how we pushed through 3 times. Okay, actually, you could count this one. You could count this one. We pushed up. Really, in the year of 2017, we could count this. So pushed up once here. All right, to 30. 32, then we got to 35, then we got to 60, then we got to 67, and then we finally got to 100. So 5 pushes up in 2017. Checkmate was oops, sorry, Roman got something. Yeah, it may. I mean, it's markets. It's another reason. All of these are reasons why I'm not a hyper Bitcoiner this period. I think you got $2 quadrillion running through the Federal Reserve, $7 trillion run through Bitcoin. on a trailing 12-month basis. Those are transaction flows. It's nothing like to get too crazy about, but the good thing is, at least in every prior cycle to this point that Roman's talking about, we hit it. We got into the ribbon every single time, right? This was kind of a fake top in 2019, and same thing after, where was it? I guess here, the ETF or whatever. But anyway, the main tops, everybody knows, 2013, 17, 2021. This always caught it. So the fact that we haven't gotten there yet, I don't think we're here to this running out of steam moment. I don't. It's always famous last words. This time could be different, but yep. But here's another really bullish chart, in my opinion. This was from Checkmate. I even commented right here. This is the chart I was commenting on. It says 2017 appears very 2017-ish. He says yes, despite being 100x larger, remarkable and noteworthy. So here we are. These are drawdowns from, from the prior tops, basically. It's a very good chart. And it's three different things that are drawing down. The pink, price is the most sensitive. So price is all the way in the pink. Then market cap is less sensitive. It's in the orange. And then the realized cap, which is when the coin last moved, what was the price of the coin then? Very smooth number. That's the lowest drawdown. So as you can see, after each halving, we have a big drawdown all the way. You get these blobs of blue when the realized cap starts to go down a little bit. And then it's gone. We're in all-time highs of realized cap right now, so we're out of that territory. But if you see this choppiness here, you see a little bit of it in 2021, but you really see it in 2017. So it's kind of exactly the same phenomenon that you see here, right? Remember, same figure here. 1, 2, 3, 4, 5. And it's also, again, another reason why I really like these bands is because, look, I'm not infallible. I mean, I remember big OGs saying in 2017 they were selling Bitcoin at like $2,000. So, that's here. It's here. Where they're really right on trend. They saw this impulse and they thought, well, maybe no one take some chips off the table. That's only halfway through the run. It's the same thing that's happening right now, right? Let me go back to the ratios. So that 1, 2, 3, 4, 5. Let's see if we can pick out any pumps here. Which again, it goes all the way back to the ET. Oh, sorry, go a bit like here. These tooltips are too big. So even if you want to count. Don't count this one. This just gets back to the average. But this one for sure was the ETF push right there. You could call it kind of like a fake one because this is the ETF push. But I think, again, just to replay the 2017 market, there's one and then maybe two here. We're slow this year. We're slow for sure because we're already in August. And you see where 2021 is totally different because we were even fast. But if you look to 2017, August put us here, right? So this is also interesting. I'm just not good of a trading view, sort of an analyst to draw lines on these and instead of just running the math. People have said, we're going to go push this out for another year or, Fibonacci, all this stuff. Elliott wave. But the safest bet is just to say, look, this hasn't broken yet. It jumps into this band. So if it jumps into the band, why would we assume it's not going to jump into the band this time? Certainly as volatile bands back in the day, right? We were figuring it out. What's the appropriate levels, but kind of like the old pricing power curves. Remember I talked about always how it settles down around 2016, right? Basically from here you can see that it looks very close to the future band. Like it's, most of the volatility is gone. I think you can say the same here. It's a little bit more volatile, but it's pretty good. If you look at how smooth that band is relative to the future, which is just academic. So anyway, after 2 weeks in summer choppiness, it's only good stuff as far as I'm concerned. But anyway, checkmates. Obviously, if you don't follow him, follow him. He's probably the best at on-chain analysis, which I want to get more of. But it's expensive. He does Glassnode, or used to work with Glassnode. I think he's on his own now, but very similar action, right? If you we're moving, you know, remember when these things are non-existent, it means we're making all-time highs. So we're making all-time highs, making all-time highs, and we just sort of, it's a wall of worry. We chop our way higher. If you look at this chart, and you see the repetition. Yeah, it's famous last words. I can't point to more data than this, but it just, to me, seems like it's going to repeat. It's true, Wall Street wasn't involved as much, but they still, you know, CME futures started here. Could short Bitcoin. More crypto exchange futures were here. ETFs here. I don't see why it would necessarily move into this new market where it just grows sort of normally. We don't have these big drawdowns anymore. Yeah, that's a good point. So a year and a half. I need to get a chart that tracks exactly the days. Probably tops from halving and stuff, but doesn't have to be exact. I mean, but it's amazing to me, first of all, that this asset has still managed to drop at least 75% from its prior highs. Which to me, if you just want to own more Bitcoin, that's like the most beautiful thing you could ever see. It's also why mining is a hell of a difficult business, right? So go back to here. No, here. Right? You see that pickaxe? I'm pointing to it with my cursor way down here. You know, the market's always way ahead of the miners. And by the way, there is an answer to that hash rate. Does hash rate follow price or price follows hash rate? It's always hash rate follows price first. And then on the way down, of course, price will follow hash rate. But it's clear that when the market price explodes, then the activity comes. But if you take away the market cap, it's really subdued, this market, this time. I'm going to take this off. It's just very smooth. And so here's another very simple explanation. But if after the 2021 bull, we got to let's call it 17 billion. And after the 2017 cycle, we were at 7. All right. 6. Let's call it 6, whatever, just round numbers. So we got 3x higher. 3x higher on this number. Then 3x higher here would be, what is it, 52? 58? 58, I guess, right? 48, sorry. Math in my head. 48. So 6, 15, 50. You could totally see this number topping out at 50 billion and then falling down again. As people try to figure out, how this market works. And by the way, those are still extremely small numbers for an industry. It's nothing to scoff at, but the gold market now is well over $100 billion a year. Oil is always a $1 trillion industry, at least. Which is more reason why I have further belief in the power curve, slow adoption of Bitcoin, network adoption of Bitcoin it just seems very difficult to accrete all at once into this sort of dominant global currency when, it just takes time. Here's gold versus Bitcoin. I saw another good one. Let me pull it up. This is what I wanted to talk about. From my buddy APSK. Good power curve follower. Hold on. Let's just talk about this first. So we have Bitcoin priced in gold. All right, and it's not out from a market. I'm just triangulating. Okay, so I don't know exactly, but roughly Bitcoin got to 14 ounces of gold in 2017. 2021 got to 34. You see with this is the top 10 percentiles here. Oh no, sorry, this is every 10th, not top 10, every 10th. And here, Bitcoin is super low still in terms of gold. So if you're a gold bug, I would recommend, never financial advice, but Bitcoin looks pretty attractive in terms of gold. If you have gold, quote, only costs you 35 ounces to buy one Bitcoin. At the bottom, it was only going to cost you 9.10, but it's going up. It's trending up. But we're still very low here. This is one thing that Bitcoin hasn't seen yet. So if I go to APSK's chart, which is really good here of the last gold cycle, I'll show you. This is another great follow if you don't follow him. Let's just look at it. You can see that, right? Yeah, so this is this is market cap, actually. It's not price. Numbers are going to be different, but I just prefer price. Does he have it on? He might have price on the next one. No, he doesn't. Anyway, so this is a great presentation. I need to do my charts like this too, dividing it up into the cycles. And you see 2017 was a huge top. Again, this is in market cap, not the numbers I was just showing you before, price. But he makes the point that measured in hard money, there hasn't even been a fourth cycle in Bitcoin, which is true. It's right down there, which is pretty wild. And if we think about, well, okay, there's going to be something, but it might not be as good in terms of gold as it has been in the past. I think that's also a reasonable thing to say. So maybe we go 3x from here, only to take us to a market cap of, I don't know, somewhere here. 1.5 billion ounces of gold per Bitcoin market cap. Good meme right there. But this is really cool too. I think this is a very nice presentation. People start these cycles on different time periods. He starts his on August 19th. Not sure why that is. Anybody know why? Because that's not the halving. Oh, no. No. August 19th is the date of valuation. It starts around the halving. I would say started at the halving. It's close to the halving because halving was like April 2024. So I don't know exactly what that is on this chart, but anyway, I need to do a chart like this. It's good. And you see you see how 2021 was so early, right? But, we could very well see lower and lower highs for this metric. 2021 proved equal to 2013. Nothing like 2017 again, perhaps. But anyway, I think this is really, really good. In hard money, it also tempers expectations. Like there's also gold. There's a lot of gold bugs that hate Bitcoin. We will eventually beat them, but it's a long time. Anyway, I'm talking too much. If anybody wants to see anything else or look at something else, it's mostly what I had planned today. Just revisit the trends. It's been 2 weeks. Don't worry. Don't get worried. Oh, here's one more. Market cap per transaction. It's also nice. I need to put this in the normal. These sigmas are kind of, I'm getting too cute with the language, but it's basically the 2/3 of the time and 95% of the time is between both the blue and the red bands. Hello / unfortunately, no. I make these charts like every morning. It's very heavy. It's all hosted locally for me, like on my website. My internal server. There's mistakes all the time. I have to fix them. So I'm not set up for it. But you can see a few charts on my website, like the main power curve charts. But it's talking about extensions in price. So obviously we got to, we went, there's that number 3x again. We went 3x in 2021, what we were in 2017. 2017 was obviously higher in multiple than 2013. Closer to whatever, 12x probably. Depends on how you would measure that one, but 16x even, 15x. So we went from 15x to 3x difference between this cycle and this one. Some people say it would be less than 3x. It's possible. So 3x itself, by the way, is 180,000. So it's another indicator. Then you see where the market cap was at the time. This one is a very smooth number. It's not, it doesn't really overshoot, interestingly. So $828,000 worth of market cap per transaction in 2017. All right. Which, as you see, is almost 3x the trend. The trend was 300,000, say, 300,000 at the time. Let's look at 2021. Again, this is the real top, first top. Oh, so that got really high here. So it got to 5.7 million, which is over the trend, which was about 1 million. So this was even higher, 5x at the time. Bear with me with these numbers. I'm kind of doing it on the fly here. This is not as fancy, but so we got to 5x the trend, and then let's just do 5x the trend here. Oh, actually, this is just a signal, isn't it? It's not going to tell us the value. I'd have to do math. Again, it's too difficult. Let's assume the trend is 3. Let's assume, again, 5. That's 15 million. 15 million in market cap per transaction. Backing into a price here, I can't calculate it for you. I'm too dense. But let's say it's right now it's about double the trend. Trend is 3. We're at 5. So let's just say we double again, very simply. It's double in price. A double or triple again. So similar ideas. I got to flesh this out a little bit better to give you better ranges. Yeah. No, thanks for asking. I mean, people ask all the time. It's just, I pull this in once and it's pretty heavy. I run it locally. It's all in JavaScript, this chart. This charting software, you could say. But I think that if I can just find the charts that you guys like to see and show them again and again, it's probably more cost efficient for everybody. Like Glassnode charges something like $10,000 for their pro subscription, maybe more. And I just don't, I'm not paying that kind of money for that. So trying to build out my own Glassnode features right now, but it's taking some time. Because there's a lot of good stuff. Obviously, I'm sure you guys follow Checkmate. He's really, really good on this stuff, on the on-chain. Oh, but here's what I wanted to say with this is, so he was responding to me, right? And he said, despite Bitcoin being 100x larger, he's talking about market cap. It's a remarkable consistency, which I agree. But then here as well, this is a good chart to show consistency is, let's just take everything off. Let's even take this off. This is the actual data. Let's just look at the trend. All right, so back in 2017, the trend was, we'd do 300,000 market cap value per transaction. Okay, that's what this is telling you. Now, it's 3 million. It's only 10x larger, actually. Which again shows a remarkable level of scale. which is why it's a power regression is a great fit for Bitcoin. So this 88% R squared, power regression as usual. It's not that much bigger. I mean, it's an order of magnitude better, 10x bigger, but it's not some unsustainable numbers that we see here. And it even looks more sustainable than this, right? Because he says 100x larger in market cap. It's true. Market cap is 100x larger than it was 7 years ago, 8 years ago. But proportionately, when you look at other things like this, it's pretty gradual. It's pretty normal. So again, just to show you, this is 2/3 of the time would be within this band, and the actual, you get these bumps. So we haven't even started really the bumps. It's kind of weird. We didn't really hit the red line here. We only hit the blue, but we definitely touched it in 2021, 2013. Let's just assume we get close to it here this time. We might not, but let's assume. So it's something to keep track of. It does not. Good question. Tea time. It does not give you, it's a time agnostic. Giovanni has I think he calls it like the full model, where he's trying to measure these booms. It's not a clean layover, in my opinion. Precisely, actually, because 2021. So let's go back to here. Right? 2021 confused everybody, myself included, because there's double top, scam top, second one. And this was early, right? Usually it was in November, December, or October on the 4-year. So it really is, it's kind of a dumb man's game, at least what I am saying. I'm not doing anything more complicated than saying we have 4 years of halvings. That changes the game in mining and the market, and everybody thinks about it. There's less and less coins. And usually it happens that a year and a half after the halving, we get a top. That's all that I'm saying, but I'm doing nothing about saying that it has to be during this time. So I usually just pull it out to the end of the year here so you can see. Whoops. You see the numbers. So, and I've usually cut it off at about that 96 percentile there, right? Which is 2 to 3 times the trend line. So if the trend's 125K, caveman math, 2 to 3 times that, 250 to 375K. That's my brass tacks. And having said all that, you look at the 2021 top, and that's confusing because it did not work that way. It was quick. This one was a nice, beautiful blow off after a big, long crypto winter, as they called it. But even here, we had the double top. Although the first top was lower this time. And then, of course, 2011 was in the middle of a halving period. It's just completely unrelated to anything else. So nothing is a science here. But I think the patterns overall should give us comfort. But yeah, I don't see it any more complicated than a 4-year cycle. But this definitely gives me comfort. Again, every time we're above this black line, we're pulling it back up. It's fun. That's the fun part about this. Every day that we close above this black line, we are doing better than 2/3 of the time. Because 2/3 of the time, the price is below the black line. But yeah, it's a good question. Yeah, checking with Giovanni, he probably has more complicated things to say about that, but for me, the proof is in the percentiles, right? The proof is that here's the every 10th now. Okay, so with the strength of this curve, 96% R squared over all time, it seems very unlikely that we go off into a new, different trend. And I can put on the evolution of the yearly trends, because that's also a helpful figure. 1 second. But, you know, if anything, it's getting more consistent around these bands, not less. Okay, so here's the good one. I've shown this a lot. I need to probably add more years, but okay, so here's the 2010 trend. This is why if you look back at, let's say this, you see you get these wacky, the band looks pretty wacky here, right? Because it's early. Not a lot of data. It's sorting itself out. Looks wacky. And like here, if you just look at the price trend, you know, only counting 2010 data, you're stratospheric. And that would literally tell us that we're at $6 billion Bitcoin today. So we're not on that trend anymore. So we forget 2010. But then, and I have 2019 there, you can already see it, but it was going to be dramatic. So remember, 2016, I said, was when it starts to be normal. You saw it come. Now 2017, 2018, 2019, 2020, 2021, 2022. 2023, 2024 are also very close. So it's basically the more data you add on, the closer you get to this black line. And you actually get a little bit lower each time after all is said and done with the cycles. However, that is not always the case, right? So this is actually a good point. This is a good point. So 2024 trend is probably lower than we are now. I need to get it to data to talk about, but so let's leave everything but the 2022 trend and the black line. So black line is all-time data. Here's 2024 is going to be higher, actually. So this trend line stops calculating from here. I should do it on the fly, because actually 2024 could be lower than the black line. Anyway, 2022 data, that dotted blue line is only calculating from the year of, like, all the start date till the year end 2022, then projects. And you see it's higher, right? Because the black line takes into account all this data. Actually, we do take in it. The 2022 line takes it into here and then stops. But the black line calculates all this data below the black line. The point is, after 15 years of pricing data, right, put in all these trends, it's more or less a record that we've set sort of the low here. But once we get the booms again, it will go up. That black line will start to get higher than some of these blue lines, because that's just how it works. You know, once we're like this, the lines will get pulled up. The black line will get pulled up. So it just plays around. But over the long term, and I really need to get 2024 trend line in here to completely prove that to you, because it's possible Bitcoin, the black line is higher. It should be, actually, because 2024 would stop calculating from here, roughly. But we've had a lot of data that was higher. So I'm talking about too much about something I'm not sure completely, but basically, this chart should give you a lot of confidence that the power trend is accurate because it's very close to these blue lines. If anything, it gets more conservative over time. It doesn't get higher. We're not going to like hyper Bitcoin territory here. We're just settling down into a even more conservative line. But we should also be excited because this line doesn't stay low all the time. It will go back up during the bulls. So once we get a move like this, black line will get pulled a little bit higher. And really what I should do, I think, so here's what I should do. I like picking December 2030th as sort of a benchmark date, December 31st. You look at all the tooltip there. As a baseline, the all-time trend is 559,000. Right? That's what it is today with all the data. That's how it would project out. But you see, if we went to older data during like, not catching the last bear basically, or maybe the last two bears, you get higher figures, less conservative figures. And really there's no sort of truly benchmark thing I could give you because it's arbitrary when we measure the trend, right? So I could say that the all-time trend is the fact, but we're also moving into a bull now. So we've just gone through a big bear, right? With all this data pulling this black line lower and lower and lower. But now we're going to start pulling it higher. So that's the cool thing. So what's probably good to do is track the level of the 2030 projection over time. I got to figure out how to portray that visually, but the point is, I think it's certainly not going to be as high as 830,000. That's the 2018 trend, right? So it's back to earlier data. But I don't think it's going to be as low as today. I think it's probably closer to 600,000, give or take. So we're at right now 560,000, 560,000. I think, when we get to that date in December 2030th, I believe we'll be closer to 600,000. Yeah, it's amazing. The amount of data that we have to play with this stuff is just incredible. So that's a lot of words that I put into that last chart, but let me know if anyone doesn't understand that. It should be very compelling. As far as, what Bitcoin is doing, how it's getting adopted, how we got, grandma at American Thanksgiving usually blows it off to very high levels, sometimes before Thanksgiving, like happened in 2021. Like the data points on each of these lines are vast, right? And it's not really pointing to anything. It's not pointing to anything like hyper Bitcoinization. It's always famous last words. I said that in Helsinki. It's like I could be wrong. I'm happy to be wrong. But if you want to sort of plan this, live your life a little bit happier with your family, not thinking that we're just going to explode to $1 million tomorrow and stay there and move to sats. Let me show one more on Fedwire. Yeah, this one. Yeah, that's a good comment. Okay. Let me take that off. Okay, so this is another one that really makes me not, as bullish as we all can be, and as much as everybody hates the United States debt levels, like this really shows the supremacy of the dollar. I'm not defending the supremacy. I'm just showing you what it is. Let's take this off. So again, here's the 1.1 quadrillion. We're moving to 1.2 quadrillion in dollar flows through the Fed. That's bank reserves that flow through the Fed every 12 months. Bitcoin does 7 trillion. Now, a lot of people, when I show them this chart, they're like, well, Bitcoin is a store of value asset. It doesn't need to have the flows like the Federal Reserve. Okay, I mean, you might be partly true, but we're talking about dominance of a currency. Like we're talking about becoming the global reserve standard. People are going to want to pay in that instrument. So, in my opinion, this is going to at least have to get kind of close to this number. Doesn't have to be for sure. And yes, it's possible that this number doesn't get close at all and Bitcoin still flies high in value. That's also possible. But these are still raw numbers that do like a lot of explaining of how huge the dollar is. Right? And it's an amazing jump. I mean, let's take off the Fed now. There's Bitcoin. It's kind of like the miner revenue. Now this is different. This is transaction value in coins that flow through a trailing 12-month basis. Again, we're way low here compared to the prior top. We did 18 trillion as the top last cycle. So if anything, we should be conservative about where we are now. People point to the fact that we have ETFs. We have a lot more Bitcoin treasury companies. We have a lot more ways to get exposure to Bitcoin than not buying the asset itself. That's why this number is lower. All true. It doesn't mean that the network shouldn't be used, though. $3.125 coins per block coming out, right, since April, May 2024. So anyway, you put the Fed in, you compare it to Bitcoin, it's huge. The supremacy is here. We've been as good as only about 57 times. 57 times smaller than the Fed. And that was that top. That was 18 trillion versus a quadrillion. And then we went back up to 320. Now we're, 157. So again, all of this just points to gradual accretion of value, in my view. Like, enjoy the time with your family. Thank you for tuning in, watching my work, but I wouldn't on a per block basis get too hyped up about any of this. It's just going to take time. This is only the dollar, by the way. The Bank of England has a chart like this, way smaller, for sure. Probably 20 times smaller, at least. The Euro system has a chart like this. Terrible Russia has a chart like this. Japan has a chart like this. This is only the dollar. This is only bank reserves of the dollar which flow through the Federal Reserve System. This is bank settlement money. That's how it moves. So that is analogous to Bitcoin, but Bitcoin has a long way to go to even, get close to the dollar, but certainly other things as well. And then, paradoxically, this is a chart I need to make very soon because we're getting very close. There's about $2.4 trillion worth of dollars, physical cash money in the world, printed by the Federal Reserve all time. 2.4 trillion. Bitcoin market cap is just under that. So that's the only currency we have not closed above as far as just raw cash. It's just another milestone for Bitcoin to reach. And so it is going gangbusters in all these ways. But even having considered all of those things, there's a lot more work to do. And it shows you how quickly they can scale their system, right? Like, look, before the pandemic, we were doing 700 trillion. Now we're doing 400 trillion more. They're doing it in the banking system. It's also another thing why I say skate to where the puck is going. It's not like we can just lock in 20 trillion in gold, 25 trillion in global based money, and that's it. We pass these numbers. No, I think they're going to keep both growing at the same time. Wealth Squad Ace says Lightning becoming available at the end of 2017 also probably plays a big role in Bitcoin network drop. Very true. Very true. That's a layered solution. Let's go back to here. So less coins trading on chain. Another side note, really cool guy I met. He's running a project. It's called UTX Oracle. UTX Oracle. I think you can run it on top of Bitcoin Core as a Python script. Fairly easy just to start it up. But he has like a chart of if you take every Bitcoin transaction that's obviously not from an exchange or that's obviously not change itself, which is not always easy to understand, to calculate, I know, but he's basically just taking the amount of sats and dividing by 100, or 100 divided by the amount of sats, I guess it is. No, the amount of in Bitcoin divided by 100 would get you a relative price that those coins moving would represent. And it's a really interesting conclusion. I want to get him on the show to stream, but he says still on to this day, there's the vast majority of on-chain transactions that go through are in $100 increments, which is wild. But that's just people that want to pay, use a $100 increment, usually buy and put money in a wallet. I don't know the details of if that has to do with like certain wallets or coin joins or whatever, because that's obviously a relatively new thing. But he said the distribution is even the same from like 10 years ago. And so you can actually use that data if you assume that you have to assume that that's still a pretty accurate number, and you can get a price every block. So you don't actually need, he's thinking about using that as an Oracle service. You don't need any exchange if you have that heuristic. It's pretty wild. It gives you a price per Bitcoin every block. But that assumes, of course, that this $100 increment still stands, in the future. But it's pretty cool. So anyway, point is, yes, there's Lightning, but there's still a lot of people making $100 transactions on chain too. And if banks come on board, and if banks are really doing this, which we're far from, like banks accounting for stuff in Bitcoin, loans in Bitcoin. I know it's coming every day. I know. But you know, that's the that's the that's the story of this stuff. This is what these are cash money transactions between banks. That's what this light green shaded out value is. It's massive. It's enormous. Anyway, rambling on a lot about each chart, but keep tracking this one too. We got a long way to catch here. All the more reason why, to me, something like these curves, which you're in these bands, make a lot of sense. Thank you, Kurt. And I appreciate the good comments, really do. Trying to keep myself sane as we go through this, right? My website, if anyone wants to donate, you can do it right there. I'd like to just keep doing this. I think it's fun, and rather than everybody have to pay $10,000 for Glassnode, including myself, maybe I can get a node. I mean, I have a node going only for statistics, but I need to write the scripts myself, I guess, and get a lot of more of these on-chain metrics, because then it will be, I think, even more helpful. Donations always appreciated, though. But again, if people are confused about the power, you're just hearing this the first time, this is a bad part about my charting software. I'm going to put this on log bottom, so we have log left and log bottom. Yeah, that didn't work. Hold on. Too much data. Let me... No. Let me take this. Actually, hold on. Let me do it here. Too much data on that one. Other reasons why I don't put these things on the site. Okay, so this should work. Here's the different pricing models. Got stock to flow, plan B's models. Remember, the power curve is like so good that it's almost the same as 2016, right? All time is the solid black line. Dotted black line is only until 2016, so it's unbelievable. Fit. Here's if you just shoehorn in an exponential trend line, which again, straight line on log scale. You can clearly tell that the power curve fits Bitcoin better. R squared is 96% for the power, 86% for exponential. But if we, okay, now let's just try this. I'll do log bottom. Gosh darn it, I'm doing these things on the fly. Why can't I find a log bottom that's going to work? It is on my website. So this is log. And the power curve will become a straight line on log. So you can see this on my website. And this is kind of a chart that a lot of people say that, you can't unsee. Once you see that straight line, go through it, you can see, well, that's how it works. So basically there's a lot more space on the left-hand side between dates, and then on the right-hand side, these are really compressed. All right, so you're like 2017, then 2025, then all of a sudden you're at 2034. But for some reason, I can't get the log to work on my active chart without being finicky. Let me pull up a different one. Let me pull up this one. Thank you, Wealth Squad. You guys are awesome. It's a good community. I really enjoy streaming with you guys. All right, here we go. Finally. This is a, again, log is very hard with my charting software. It's not working out correctly, but if I go log bottom, we turn this into a straight line. Ignore these dates. These look stupid. It's not January 9th here, but the tooltip is correct. So you can see like 2014, we're already halfway up the chart. We're here only to 2017. Now all of a sudden we're at 2025 and then 2030. So that's what a power curve actually means. If I could get a better, for some reason log is not working here, but not working great. But it's a straight line on log, which is unlike exponential, which is a straight line on log linear, which is here. And you can even see the projections, like they're just silly, right? It's kind of like common sense silly. So we should be at $580,000, $583,000 per Bitcoin if we were on exponential, and by the end of the year, we'd be at 780,000. It's not out of the realm of possibility, but it's a straight line. So we're only going to intersect the pricing data a couple times, and here we last do it in 2022. So, if you go out to like say 2030, that's when things just seem ridiculous. Again, we're around my 600,000, 550,000, 41 million per exponential. Not going to complain if we go exponential, but at least the data doesn't show that. I think that's about all I wanted to do today, guys. Just catch up after not streaming for a couple weeks. I do have some more trips, some travels. Gonna do BTC, Bitcoin Amsterdam in November. Sorry, in November. That's a while away, but gonna go back to the US in late September. It's a good way to look at it, though, right? You don't have to. Look, I'm sure if you guys are like me, you're looking at the price 10 times a day or more. I think it's one of two options. One is what a lot of people are saying right now is that the 4-year cycle is over. Institutions, Wall Street are going to dampen down the volatility, and then we're going to go on a certain trend. What trend that is, they don't necessarily say, but I would say if they're right, then it's going to be on the power trend. It's not going to be on some exponential trend. So there it is. Or the other thing could happen is we we stick to the 4-year cycles. Which again, back to T times question. I'm not telling you the exact moments, but it seems to be the 4-year cycle. And I would say if it's not broke, don't fix it. Meaning I hope we have a 4-year trend. I hope we have opportunity to lighten up some coins here. Buy back when we get down to the 10th percentile. And Peter Zion says it's $17,000 overvalued at $16,000 on Joe Rogan. Never financial advice though, right? So anyway, I'm going to leave it there today, guys. Thank you for watching. You got a couple charts here. I'll try to get more up. I need to get the PSR on this site. It's been on there before, but this is a better format. BTC Pay. It's here. It's on the footer of my website. Lightning, on-chain, however you want. If you can, I appreciate it. All right, guys. Happy Thursday. See you tomorrow. And all the best.